Why are Japan's largest trust bank, its biggest international credit card network, and the global entertainment giant all launching major public blockchain initiatives in the exact same month that Japan passed its most historic digital asset law? These massive projects didn't happen overnight. They're the symbolic culmination of years of meticulous industry-wide preparation. Welcome to episode 88 of Japan Digital Asset Weekly. I'm Keisuke, CEO of Wakyodo and the venture partner at joining the capital. Today, we are witnessing a monumental milestone in the Japanese market. On July 15th, Japan's parliament passed the revised Financial Instrument and Exchange Act, which will officially classify digital assets as financial instruments when it takes effect by 2037. While the passage of this new law didn't instantly trigger the recent wave of traditional finance adoption, it serves as the ultimate validation that Japan's transition from an experimental sandbox to a fully regulated institutional market is now complete. Today, we break down these strict new rules and how titans like Sumitomo Mitsui Trust, JCB, and Sony Bank have aligned their massive infrastructure upgrades with this historic regulatory shift. Let's start with the symbolic anchor of this shift, the FIEA Reform. For years, digital assets in Japan were regulated primarily as payment instruments under the Payment Services Act. Following the passage of the bill on July 15th, they will be regulated under the exact same comprehensive framework as traditional stocks and bonds once the law comes into force. This legislation will introduce strict, institutional-grade guardrails that fundamentally change the rules of the game. For instance, it will establish clearly insider trading regulations, specifically tailored for digital assets. Any entity trading more than 20% of an issued digital asset will be classified as a major trader and is subjected to strict disclosure rules to prevent market manipulation. The law will also strictly prohibit the communication of undisclosed material facts and trading recommendations. Furthermore, penalties for operating an unregistered business will be aggressively increased from a maximum 3 years up to 10 years of imprisonment, along with massive fines. The law will even include provisions to invalidate contracts made by unregistered operators. This absolute legal certainty, knowing exactly what the future rules are, is exactly what multi-billion-dollar institutions require to deploy capital safely without reputational risk. And we are already seeing the result of this long-term alignment. Just days before the law passed, Sumitomo Mitsui Trust Bank, Japan's premier trust banking group, announced a groundbreaking initiative. They are tokenizing a Cayman Islands domiciled money market fund, or MMF, directly on the public blockchain, classifying it legally as an electronically recorded transferable right. This is a historic first for a Japanese trust bank. With the technical support of Securities Japan and FIEA blocks, they are aggressively targeting the tokenized MMF market, which has seen staggering consecutive growth of over 350% per year since March 2024. By utilizing programmable smart contracts, they are seamlessly integrating asset management, investor registration, and custody, drastically cutting the operational cost of a traditional fund administration. They are aiming for a full-scale rollout by March next year. Simultaneously, Japan's largest international payment brand is modernizing its global platform. On July 14th, JCB signed a memorandum of understanding with Circle. They are initiating proof-of-concept trials to use USDC for massive cross-border treasury management and corporate fund transfers. JCB aims to eliminate the friction of legacy correspondent banking, but it goes beyond that. They are also exploring USDC payments for domestic merchants and testing its availability across multiple blockchain networks. JCB is actively seeking low-cost execution using established global stablecoins. Finally, Japanese financial giants are aggressively expanding into the U.S. regulatory sphere. Sony Bank recently secured conditional approval from the U.S. OCC to establish a trust subsidiary called Connected Trust in the United States. Joining a select group of approved entities, Sony Bank plans to issue a US dollar-pegged stablecoin by 2037. The strategic goal here is massive. They plan to seamlessly integrate this stablecoin into Sony Group's vast global entertainment ecosystem, capturing low-cost, borderless payments across gaming and anime platforms worldwide. Here's Wakyodo's take on this historic month. The simultaneous arrival of the FIEA Reform and these massive TradFi announcements is no coincidence. It is a result of years of deep strategic dialogue between Japanese regulators and financial institutions. The FIEA Reform is the final green light, establishing the clearest, the most robust compliance framework in the world. For global digital asset businesses, protocol developers, and the infrastructure providers, the message is undeniable. Japan's institutional era has officially begun. However, partnering with institutions like JCB or Sumitomo Mitsui Trust requires an incredibly deep understanding of these new strict FIEA requirements. In Japanese corporate culture, adapting to this regulation is non-negotiable. At Wakyodo, we specialize in bridging this exact gap. We provide the Japan Lead as a service. You need to align your technology with Japan's rigorous new legal framework and secure institutional partnerships. Visit wakyodo.co.jp to learn how we can accelerate your market entry. Next week, we will dive into part 1 of our special series on the SBI Group's massive global ecosystem. Thank you for watching and see you next Monday.